Concerned about the potential privacy implications of central bank digital currencies? You're not alone. There are Federal Reserve officials tasked with developing a digital dollar who also share those concerns. Before we begin, remember to like this video and subscribe for more economic updates. Last week, Federal Reserve Governor Michelle Bowman reiterated her comments made earlier this year, emphasizing her concerns about potential privacy implications. Speaking at a Harvard Law School roundtable discussion on central bank digital currency, Bowman said, "The potential benefits of a U.S. CBDC remain unclear, and the introduction of a U.S. CBDC could pose significant risks and trade-offs for the financial system. These risks and trade-offs include potential unintended consequences for the U.S. banking system and considerable consumer privacy concerns." This is not the first time Governor Bowman has expressed reservations. The risk that a CBDC would provide not only a window into, but potentially an impediment to, the freedom Americans enjoy in choosing how money and resources are used and invested. A little over a year ago, the president of the Federal Reserve Bank of Minneapolis was openly critical of CBDCs, saying, "I can see why China would do it. If they want to monitor every one of your transactions, you can do that with a central bank digital currency." Now let's take a look at the sharp contrast between concern and enthusiasm for CBDCs. A few years ago, Augusta Carstens, general manager of the Bank for International Settlements, spoke in Orwellian terms about what he sees as one of the key advantages of central bank digital currencies. "We don't know who's using a $100 bill today, and we don't know who's using a 1,000 peso bill today. The key difference with the CBDC is the central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that." In a speech delivered last month, Carstens expressed frustration that the current national laws governing central banks prohibit them from issuing CBDCs. Close to 80% of central banks are either not allowed to issue a digital currency under their existing laws, or the legal framework is unclear. At one point in his remarks, Carstens even had this to say: "People want their money to be digital and programmable." Is that really what people want? We know that there are Federal Reserve officials who don't agree. More than that, I speak to Americans every day, and that's not what they're telling me. They're telling me they're concerned and that they don't want it. According to a poll conducted earlier this year by the Cato Institute, 68% of Americans said they would oppose adoption of a digital dollar if it meant the government could monitor their spending, and 74% would oppose it if it meant the government could control how that money is spent. But right now, 131 nations representing 98% of global GDP are exploring a CBDC. And one of those countries is the United States. In March 2022, an executive order was signed that calls for measures to explore a U.S. central bank digital currency, CBDC, by placing urgency on research and development of a potential United States CBDC, should issuance be deemed in the national interest. So whether we like it or not, central bank digital currencies may soon become a reality. It might be wise for citizens to start contemplating how they'll navigate the new financial landscape when it arrives. Until next time.